E-Clark's rally is more than 11% on the back of a strong fourth quarter performance. The numbers beat analyst expectations with rupee revenue rising 5.2% on a sequential basis. Contract value of new deals is at an all-time high of $51 million as well.
And Muthoot Finance slips close to 5% after reporting its fourth quarter numbers. The net interest comes in a little slower on a sequential basis. The management tells CNBC-TV18 that the cost of operations has stabilized. That's the cost of borrowing has stabilized more or less. The street seems to be disappointed with the 15% AUM growth guidance.
Tilaknagar Industries zooms nearly 10% following its results. The company reported good revenue growth led by 20% volume growth. The management tells CNBC-TV18 this will sustain. They are targeting high teens revenue growth in FY26.
Shree Cement climbs nearly 3% after reporting a good set of numbers. The management tells CNBC-TV18 that they expect 8% volume growth in FY26 and they plan to reach 80 million tons, all of it by the organic growth. They also say that they'll go towards profitability in comparison to volumes.
Wendt tanks nearly 15% after its parent company announces an offer for sale to divest up to 37.5% equity in the company with a floor price of 6,500 rupees per share at a near 37% discount, a sharp discount to yesterday's closing price.
Well, hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, with me is Mangalam, and as we speak, the market's actually looking quite good. Yes, the Nifty is down close to around 70 points, but in fact, 30 minutes ago, we were down 170 points. It's telling you that this market is shifted to a buy on dips market, and what's doing well today yet again is the broader markets. The Nifty Bank is taking support at around the 20-day MA. The broader market's looking quite good. The breadth of the market quite good. Well, you'll have to say it's a fairly good trading session, Mangalam.
Good trading session. You know, major events are behind the market, so maybe some consolidation is on the cards. Because the downside is protected, the mid-cap index doing a lot better. That provides a lot of comfort to those who are looking at their portfolios this morning itself. Let's talk about earnings, though. The company on our radar is AkzoNobel. They've seen a revenue growth of 5% year on year, which is among the highest ones that we've seen in the industry so far, the second highest from the numbers that have been reported so far. Rajiv Rajgopal, who's the chairman and managing director of the company, joins in now. Rajiv, I wonder if people are looking at your numbers every quarter anymore or not, because yes, the numbers are good. You've been gaining market share for the last 10, 12 quarters, but everyone's wondering what's happening with the deal. How far are you away? Because I remember the last time you joined in, you said we're very close to the deal with the parent when it comes to, you know, the B2B business, the R&D center, the industrial products business. Where are you? At what stage of, deal making are you when it comes to the decorative business?
Mangalam, good morning. Good morning to both you and Nigel. Thank you for having me on your show. Wonderful to be back. I perhaps do not have the same luxury that a lot of people have of not looking at numbers. That's the nature of my role, and my team are doing an incredible job, as you would agree, in an environment which is both hyper competitive and the fact that there is an overhang of a strategic review, the fact that we've come with another quarter of industry leading growth is a testimony to the fact that we are very focused, like a horse with blinkers, really focusing on what the goals that we are targeting. And I think that's the way it should be. We are really focusing on our execution. The industry has gone through a tepid, quarter and a year that just got done. And I'm surprised to say in the quarter, and if you look at the full year, we've had industry leading growth. Yeah? So I think that's the first. The second, and I'll come back to your second part of the question. I think the good part is in decorative, we've started seeing a good bounce back. At least for us, the growth has come back in urban towns and in the premium segments, which is a little away from some of the other players. We've had some challenges in the mass and economy where the real battle is happening in the market with deep discounting, pricing, which is significantly below where we operate. And hence, we chose a little bit of a step back in the last quarter, particularly in our mass markets and categories like putty, texture, etc. For a simple reason that we said, look, the industry is going through a quarter closer. There's no point of trying to exaggerate some of these discounts, and we said we just be normal, and we are sure that April will bounce back, and that's what's happened. Yeah, so really, from my perspective, pretty happy with what's happening there. Yes, I'm not happy with the fact that we still want to really win in the market, in each of our business. On coatings, we've had double-digit growths, and it's
Right.
very
Rajiv, you still haven't answered the second part of the question.
Rajiv, you're talking about a horse with blinkers, but the street believes it's a bride looking for a prospective match. So we want an update on that front.
Nigel, whichever way you look at it, at the end of the day, the bride is more attractive when the performances are stronger. So, let me keep it at that. But coming to the second part of the question that Nigel asked, look, I think our global CEO Greg has already mentioned in the global analyst call in the last quarter in April that this transaction should see certainty in terms of how AkzoNobel N.V. decides to proceed by the end of the quarter. And I stick to the same timeline. I'd said it. I'd mentioned a timeline of the end of third and fourth week of June. I think we are pretty much on it. Now, if it happens a little earlier, closer, it's a function because these deals are quite exhaustive in nature. It's not just a simple thing like valuation. A lot of detailing. It's a massive organization. So I think those things will need to be looked at. It's being handled by the parent. So I think as soon as I get an update, which is material, as of now I have none, I will be able to comment on that.
The large players that there were, a lot of them who looked at it, and we've been speaking to a lot of them here as well, barring one or two, not many have pursued with their bid for AkzoNobel. I remember, some backing out because of maybe competition issues, the Competition Commission issues, some backing out because of valuations, some saying that they tried, but the other bids were a lot more aggressive, and they don't see value in, AkzoNobel at the market cap that it is right now. What do you have to say to that? Because, if there aren't many takers, barring one or two, then the end result may not perhaps be beneficial to the shareholders.
Look, I would only say a couple of things. First and foremost, look, these are personal choices, strategic choices companies make, right? And if people or bidders have decided not to proceed, I'm sure it's not just valuation. There are other influencing factors which may be specific to the company. But, as I always say, it's, this is a business which has demonstrated performance, not in this quarter. Over the last 4-5 years, we've been gaining market share with all the challenges that we've had. And really, from my perspective, I think the business to the final buyer is worth its weight in gold. Yeah. So that's what I would like to say. I've seen the profile of the business. I've run it now for, I've been running this business for as a managing director and now as chairman and managing director for last 2 years, but overall for about 6.5 years. And you've seen the performance. It's a solid business. These are premium brands. I think this is something which is truly a generational asset. And I think finally, I think whoever's the winner will take it all, and you will see. I do think that the final buyer, whoever is the winner of the race, you would see a distinct performance shift, uplift in the performance. And mark my words, you take it once the whole thing is done. We will discuss maybe 5-6 quarters, and maybe with the buyer, etc. You would see a shift in the way this industry moves, and you will see the brands. These are terrific brands. Having a brand like Dulux, and International, etc., phenomenal in the portfolio. So, again, these are strategic choices company have to make, so I cannot comment on that, Nigel.
All right, Rajiv, we'll wait by to see, who comes out trumps in this. But, since your focus is on business, give us a few numbers. What kind of volume growth do you target for this year? What is the outlook in terms of margins? And since you mentioned market share a few times, what is the targeted market share? I think in the last year, as you said, you gained some. Where is it at? Where is it headed?
Yeah. So first and foremost, let me start from the reverse order. Market share, we've inched back from about 4.2 to about 5. We are now tracking, and this is decorative. If you look at overall, we are at about 7.4. I think we are trying to target to increase it at least meaningfully, and to at least about closer to 8 in the next year or so. Second, in terms of volume growth, look, in the last quarter, unlike the rest of the industry, we started bringing volume and value closer because we've had a limited play in some of the economy and mass, and we are obviously not getting out of it, but we wanted to make sure that we are doing it in a profitable manner. Yeah. So, however, from a full year, guidance perspective, I still maintain that the industry, I believe that we should now get back to a mid-single digit, high single digit growth for the year, for the full year. in terms of value. Volume will be a little ahead of value by the,
All right.
by the end of the year.
And I also hope that, the negotiations that take place with the deal have you as an important part of that, in the sense that you will lead the company no matter who owns it, and perhaps get some more of the others when they come into your fold too. Is that a possibility?
Mangalam, I don't think I would be in a position to comment on all that, but that's a decision that the buyer has to take, and obviously, So I think for the moment I'm very much running the ship, and the team is really focused, and our performance is what it is. And what we can assure through you to all our shareholders is we are not going to leave an inch for anybody to take. We are going to grab every inch that comes our way.
All right, we take that point. Thank you so much for joining in and giving us the details on the business performance and the updates that are happening outside of business as well. We hope to get an update soon from you itself. With that, let's shift focus to our segment where we get you ideas for profit from our colleagues at Money Control Pro. And today we have our colleague joining in. Anant Chaudhary has a stock.
So today let's talk about Jyoti Labs Limited, leading home and personal care FMCG company. You might know it for its popular detergent brand Ujala, but now it has many other brands too, like Henko, Maxo, Margo, Exo and Prill. They are into detergent and dishwashing segments and also other categories. Over the last 7 to 8 quarters, the company has shown steady volume growth in the high single digits, beating many other FMCG companies. Jyoti is also expanding its liquid detergent range, not just Ujala and Henko, but also More Light and Mr. White, which are placed at value for money pricing. Henko, their biggest detergent brand, is doing well as more consumers shift from powder to liquid detergents, part of a trend towards premium products. The company is also working to grow pan-India, especially for its dishwashing brand Exo and Prill, which were earlier focused on southern region. However, the other two segments, household insecticides and personal care, they are facing some challenges due to fewer product options. But as a change in the brand ambassador and higher ad spending, they should help drive demand soon. Stock is trading at reasonable valuation of 26 times on FY27 earnings. It offers a decent margin of safety and potential for upside.
Right, with that, we'll take a short break. On the other side, don't go anywhere, because we have with us Rahul Mithal, who's Chairman and Managing Director of RITES, to discuss the quarter gone by, but more importantly, the year coming ahead.
Welcome back. Well, as we speak, just take a look at the markets. The Nifty was down, we mentioned, around 150 points. And as we had that chat with Akzo Nobel, it's done a big U-turn, big recovery from the low point of the day. In fact, we're up close to around 250 points from the day's low. The Nifty Bank as well had a sudden burst, and now it's cooled off. So the Nifty Bank, from being down close to 150 points, it was up 150 points, and now it's trading around the flat line. It appears there's either some big flow that came in, or there's a big short covering bounce that did take place in that span of from 10 to around 15 minutes. So a sharp spike is what we saw, just in the last 15 minutes or so. But let's focus on RITES. That's the management on the show. We have with us Mr. Rahul Mithal, the Chairman and Managing Director of the company. Hi, sir. Good morning and good to see you in. Well, let's look at the way ahead. I recall you telling us earlier that in FY26, you're working with a 20% revenue growth and you're expecting a 10% growth on the bottom line with margins around the 20% mark. You want to reiterate the guidance, change it a little bit, higher or lower? Please go ahead.
Good morning. Yes, I recall that. And you see the trend of orders which came in Q4. We got about 150 plus orders totaling to more than 1,400 crores, making us achieve the highest ever order book. We closed the year with an order book of nearly 8,900, 9,000 crores. So with that and the kind of operational efficiency which you saw in execution in Q4 also, we are raring to go and we are aspiring to see a growth of revenue of about 20% in the coming FY and corresponding growth in the bottom line.
All right, so 20% growth and 20% growth on the bottom line with 20% margins is what you are guiding. 10% growth on the bottom line with 20% margins.
No, I think you're revising the bottom line growth as well to 20%. Is that correct?
No. The top line growth at 20% and the guidance which I said aiming to about 10% growth in the bottom.
That stays.
Okay.
What about orders? Because your order book is very close to the 10,000 crore mark. The way you're winning orders, maybe in the next couple of quarters, you will reach that 10,000 crore mark. But at the same time, there are some orders that require some sort of confirmation on, right? One is the Bangladesh order. What has happened out there? The second part is you had a cancellation of order coming in from the UP. And there was also this MOU with Middle East for the railway corridor. Can you give us an update on all of this and give us a sense of what kind of order inflow are you targeting for this year?
So let me go one by one. The Bangladesh order is a confirmed order. In fact, the order book of 8,900 crores includes all orders which are confirmed orders on which work is happening. In fact, for the Bangladesh order, the prototype designs are in the final stage of approval. There are about 5 types of coaches. And we are aiming to start delivery by latter part of the year. It's 200 coaches, so the phase-wise delivery will start. As far as the order inflow is concerned, this year saw a 60% growth in the fresh orders coming in vis-a-vis last year. So we got fresh orders of about 5,500 crores. We maintained a strike rate of 1 order a day. We maintained our strike rate of 1 export order in every quarter. So with that, as I said, we have ended the order, the year with an order book of 8,900 crores. And we are confident that we'll be able to maintain this trend in the coming FY also.
You're maintaining 5,500 to 6,000 crore worth order inflows in FY26 as well.
Yes, so we are aiming that, as you said, reaching about 10,000 crore order book definitely in very soon in maybe the next or the third quarter, and being able to aim at least the same strike rate of 1 order a day and at least the same levels of addition in order books.
Okay, all right. Sir, if you could help us out, what would the mix look like between consultancy, turnkey, if you could tell us domestic as well as exports? Give us a brief product revenue mix, so to call it, for this year.
So you see the order book, which at 8,900 crores has 3,000 crores in consultancy, 4,200 crore in cost plus turnkey, and 1,350 in export, and balance in leasing and our subsidiaries. So consultancy and export, which are our core focus, continues to get us many orders. As I said, we have broken the hiatus for the last 4 years and we did not get an export order. And because of that, you saw this dip in the export revenue, nearly nil in FY 24-25. We have continued to get 1 export order every quarter. And the way the visibility is for the coming FY, we are confident that we should be able to maintain this strike rate. Consultancy across segments, we continue to get orders, whether it is the rail infra sector, whether it is the building sector, whether it is studies in new alignments, whether it is the metro studies. So across sectors, we are getting orders. Internationally, internationally also we are getting orders. We've got fresh orders of about 400 crores in pure consultancy in the coming, in the last year, in pure consultancy, besides the export orders.
Right, that's great, sir. So, if you could give us a sense on the orders that you're L1 in, because you've told us the order book entails what you've got confirmed. How many orders or what is your L1 position right now?
So you see, whatever is L1 at whatever stage when we are declared L1, we declare it to the stock exchange. So it will not be correct for me right now to, give information which is still in work in, process. But as I said, to reiterate, all orders which are included in 8,900 crores are finite orders where agreements and LOIs have been received.
Got it. And what about, your exports? You said that exports last year were virtually nil. I'm looking at export revenue per quarter, 5 to 7 crores for the last 5 quarters all through. With the order contribution that you have from exports, which is close to 20% that you said right now, how much can you generate in terms of revenue from exports this year?
So this 1350 crore order book, which was amassed in the last 4 to 5 quarters, this will now start execution in this FY. And that will give a big boost to our top line and bottom line. And we are expecting at least about, minimum of 300 to 400 crores revenue coming in this FY. So we're going to start deliveries starting from end of this Q1 or at least beginning of Q2. And let's see how the rest of the quarters pan out. But definitely this is going to contribute in a big way to our top and bottom line.
Okay. All right, sir. Appreciate you joining in. Thanks a lot for giving us all of those details. We'll hold you to some of these numbers, and we look forward to chatting up with you as the year progresses. Well, on that note, though, time to slip into a short break. As we do that, here's some good news for all our viewers. India's business news leader is now just a click away. Introducing CNBC TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates. All of this at your fingertips. Download the CNBC TV18 app from the Apple Store or from the Google Play Store. Or you can simply just scan the QR code that comes up for you on the screen.
Near 200-point recovery from the lows that we've seen on the market. The Nifty banks still below the flat line right now, though has seen a fair amount of recovery. What are the stocks that are leading the Nifty higher then? It has to be metals and some of these auto names. So pull up Tata Steel for the second day running, doing well. In fact, this week it's put on gains of almost 10%. We're seeing some traction in Hindalco as well as, Grasim. So you have across the board gains coming in. And look at Hero MotoCorp. That stock has moved higher. In fact, it's one of the bigger gainers this week. We've also seen some traction in JSW Steel. Perhaps, the US-China trade bodes well for metals. And Shriram Finance is the other one which continues to do well. Looking at individual conglomerates, the Adani Group stocks, that should come up for you. We have Adani Ports, Adani and all the Adani Group stocks which are spiking. From the broader markets as well, no real problems. Intellect Design up 5%. We have Macrotech Developers up 3%, Nalco up 3% as well. So by and large, good looking screen, notwithstanding the underperformance that we're seeing on the Nifty Bank.
Well, on that note, though, let's wrap up on this edition of Chartbusters. The team of Trading Hour is waiting for you on the other side.